a reader asked me why I bought some Hang Seng Tech ETF. I am sure she was not the only person who was puzzled as to why I had some money in Lion OCBC Hang Seng Tech ETF since it did not pay a dividend. In a recent blog, I made a tongue-in-cheek comment about how investors should be polygamous as we should not be married at any single stock. I said the following: we might get bored. So, we go out looking for fun. When we go out looking for fun, please remember to keep it that way. Milk the cow to drink the milk, but don't bring the cow home. Translated from a Chinese saying. Don't let something which is supposed to be fun become something ma fun, which means troublesome in Chinese. The ETF was something I bought for trading because its price became too enticing to ignore. Fortunately, I made money not once, not twice but thrice doing it. AK is not really investing in Chinese tech stocks. AK is trading Chinese tech stocks. Okay, to be honest, there is also an investing element because I only got interested in Chinese tech stocks after their share prices fell from the sky. Basically, in recent times, Chinese tech stocks have been trading at valuations which value investors might find interesting. They were trading at what I thought were crazy high valuations before, and proponents were all saying high PE ratios were reasonable for these tech companies because of future growth, which was supposed to be amazing. As it turned out, those crazy high PE ratios were only possible because interest rate was zero or even negative. Then, there were some meme stocks which rode on speculative fervor and tech stocks which didn't even have a PE ratio because they didn't have any earnings. Anyway, because Lion OCBC Hang Seng Tech ETF does not pay a dividend, as an investor for income, I have to trade it to generate some income. As usual, I would keep my speculative positions small or very small. So, in the event that we have to hold on to our positions, we won't lose sleep over the matter. I treat this as an adventure or an experiment. With a tiny position, it is not something that is going to make me rich. If it goes bust, it won't sink me either. It is important not to be overly optimistic even though the tech crackdown by the Chinese government now appears to be over. Alibaba, Baidu, and Tencent do not produce their own chips. They rely on chipmakers like Nvidia to get the processors needed to run their cloud computing operations. So, they are vulnerable to sanctions from the USA. Over the weekend, the Chinese government banned its domestic companies from purchasing equipment from American chipmaker Micron in retaliation to US sanctions. If Chinese tech bulls think that with the harsh crackdown on Chinese tech firms mostly in the rear-view mirror, there is going to be only blue skies from now, they could be disappointed. China is still very much interested in maintaining strict measures against its largest tech firms to prevent them from abusing their market powers. If we are investing in a company like Alibaba, for example, we must have deep pockets because it does not pay a dividend. So, investors are not paid as they wait for things to possibly improve. So, am I trading Chinese tech stocks or am I investing in Chinese tech companies through the ETF? Mostly trading but with an investing angle. Trading for income but also investing in what I think are no longer overvalued. If AK can talk to himself, so can you.